Commodities are at the forefront of investors' minds at the moment. China's slowdown and its declining demand for raw materials, and with almost 20% of FTSE 100 companies being in the natural resources and extraction industries, the prospects for commodity markets are uncertain. Even Carney has warned the fossil fuel sector about the potential losses from climate change and of the danger of unburnable stranded assets. And, to add fuel to the fire, mining giant Glencore has been teetering on the edge, and the fluctuation of its share price has caused volatility throughout the equity market. But have we reached the bottom of the commodity bear market, and has it created any investment opportunities?
According to our cycle research, all the cycles bottomed in or around August 2015. The other point to make is that people look at the cycles and they tend only to look at the dollar price of copper or the dollar price of oil. If you look at oil is down again 50% in dollars, in rubles it's up 20% since the peak. This huge bear market in commodities only really relates to the dollar price. It doesn't really relate to the commodities if you look at them in other currencies.
There's not going to be a catalyst for an upswing in the industrial metals market anytime soon. On the other hand, we don't think there's too much further to fall. If we look at the mining equity sector and we look at bottom-up analysts' long-term earnings growth forecasts, we think that maybe the adjustment has already played out there.
There might be growing demand from emerging markets, but there are also concerns about the high levels of developing country debt. The IMF warned recently that there could be a knock-on effect on global stability. With that in mind, are emerging markets like China really going to spearhead the commodity recovery?
I mean, it's not just China. I mean, it's Asia in total. I mean, India has the same population as China. India has now grown at 8-9% a year. If 1.25 billion Chinese people have a certain amount of copper, time India's economy catches up, maybe over the next 10-15 years or so, we can see India having similar demands on the copper market as what China has today.
A recovery in commodity prices isn't going to happen until we see some stabilisation of growth rates in emerging markets, particularly China. But it is also about supply, and I would expect to see a few more mine closures given the extent of investment in new mining capacity over the last 10 years. So it is about emerging market demand, but there's also the supply factor at present.
With growing demand from developing economies across the globe, was Carney right to warn the investment world against fossil fuels?
The divestment movement's reaction to Mark Carney's statement has been incredibly positive. It's so important that he's not only really highlighting the true dangers of climate change, talking about financial stability, water, food security, these pressing issues, but also putting it on the agenda of the financial community much more and saying this is a huge issue for investors, because it is.
This is going to take years, if not decades, of global coordinated regulation to put in place the sort of explicit costs to using these fuels that could render them unburnable. I think it's definitely something we should keep watch for, and it's certainly something we should think about when we're trying to value oil companies over the long run. But I don't think it's going to take markets by surprise.
There's 7 billion people in the world. 2.5 billion of those live in India and China. They have an insatiable demand for energy and electricity, and they're not going to stop burning coal just because it's politically correct to suit people like Mark Carney. It just isn't going to happen.
Carney's statement was welcomed by some, but others think he should stick to monetary policy. Fossil fuels are damaging the planet, but can investors resist when there still seems to be value in many of the extraction companies? But if commodity prices continue to fall, export-dependent countries will struggle, impacting global growth. We had a difficult summer, but will the commodity markets continue to spark volatility this winter?